Sacchitanand Uttekar joins in with his view. Sachi, this morning a bunch of technical analysts said that, Nifty is in a bit of a no-trade zone because of this range that we're in, and there are more opportunities in individual stocks. Would you concur?
Absolutely, yes, Mangalam. In fact, if you look at the price action today, it is very well concealed within its previous day trading session itself. And when we look at the placement of the averages, Nifty has a good amount of support near its 20-day exponential moving average, which is placed at 18,080. So unless we don't break and sustain below that, probably we may not see any strong momentum on the lower side. Having said that, on the higher side, the placement of its 5-day exponential moving average would be critical. I think 18,280 is the headroom that we are looking at for the day. And in case if we surpass that, then probably the expiry range could shift on the higher side. When we look at Bank Nifty data as well, for the last 4 trading sessions, Bank Nifty has been absolutely flat. If you look at the resistance, it is clearly defined at 42,650. So unless we don't see a breakout above that, we may not see any further momentum in Bank Nifty. And on the lower side, I think 42,300 or 42,360, where its 5-day exponential moving average is placed, I think that will be a very critical zone for the next couple of trading sessions. In case if Bank Nifty slips below that, then probably it will be the front runner when it comes to selling pressure. So as of now, it is a no trade zone for Nifty as well as Bank Nifty. And if you look at the trading bounce, I think Nifty could sustain this particular momentum that we have seen during the day. And once we have a breakout above 18,280, probably we may see a very strong directional momentum play.
Okay, what would the stocks be then today? And what would your call be on stocks such as Paytm as well as Nykaa? Do you have enough data to take a call on them technically?
Well, I think both the stocks are clearly in a strong bearish trend. So I would not advise any fresh long positions here or even bottom fishing. Probably, when we look at certain structures, it is better to avoid a stock when it is in a very strong bearish trend. Probably give it some more time to show signs of consolidation, and probably after that, if we have enough evidence for building any fresh longs or any pullback moves, then probably we can initiate some. But as of now, both the stock trends are weak, and we will avoid any fresh long positions there. When you look at certain pockets of strength, I think Dalmia Bharat is one particular counter which has been doing fantastic throughout this particular series. The 1700 support has been held on really well. So if you look at the expiry data, probably we may see this particular move getting extended in the coming expiry as well. So we are optimistic on Dalmia Bharat. We are expecting this particular move to extend towards 1800, 1820 eventually. So long positions should be built in Dalmia Bharat, December futures. Stop loss should be placed at 1695 and a positional target of around 1820. The second stock that has been on our radar is on the short side. IGL, if you look at the data for the last 3 expiries, it has been failing to sustain above the 430, 440 mark. Even today we saw a false breakout, and after that we have seen a substantial amount of selling pressure. So probably a mean reversion trade could play out well here. We already have an evidence of its 5 and 20-day exponential moving averages converging, which is a sign of momentum.
All right. Sacchitanand, thank you so much for joining us and taking us through your technical outlook on the benchmark indices and individual names as well.